good morning. Welcome into Market Day Report. I am Scott Shelly, otherwise known as the Cow Guy, and thank you very much for tuning us in. Get a hot cup of coffee, get those legs up underneath the table, and we can get through these markets and see how your money's doing. These are going to be the overnights, right? So let's take a look and see what's going on. Let's take a look at see what corn did. It was just, you know what? There was a little bit of red on the screen as I was doing the radio show, and this is what it looks like basically. A penny and a half lower across the board until you get out to new crop. That's down 2 1/4. But right now, March corn went out to 422 3/4, a penny and a half lower overnight. That's corn. Let's go to the beans. What's going on with them? Well, they're down about 3 1/4 cents in the March. 11.67 1/4 last. You go out to, well, I don't know, all the way out to September. That's down 5 1/2. 11.55 1/4. These are the overnights again. Remember, this is what we've done overnight. You got to make sure that we all know that, because you know what? Sometimes I screw it up. The wheat market overnight down 9 1/2 cents in Chicago. That's March. 5.76 is the price, a half cent off the low. And as you go out the deferreds, we still lose about 6 1/4 cents in the D's at 6.01 even. All right, so that's the wheat in Chicago. From Chicago, we go over to Kansas City and take a look at the hard red. That's down 11 3/4 cents in that March contract. 5.76 is last, and that's a penny and a quarter off the lows. You know, this is kind of like one of those downer days. Everything's going to be in the red, and you can tell it in my voice, but it's no bueno. We got D's down 9 cents to 5.95 1/2. That's overnights again. That's Kansas City. Let's go over to see what the Minneapolis has got for us. 5 1/2 cents lower in that March contract. 6.57's last. Again, there's a penny and a quarter off the lows. That's kind of the same thing, isn't it? Maize off 5 3/4 cents to 6.58. Let's see what we did in cotton. Cotton's going to be, well, this is sharply unchanged basically. We're about 9 points higher in the March to 93.57. That's 9 points higher, 93.57. And we're trying to rally the backs, but we just can't quite do it. All right, let's bring in our guest analyst. That's going to be Brian Hoops. Brian, thanks for being your mainstay morning guest guy. We probably should get you an RFD TV, some RFD TV swag, so you can be part of the team in the morning. I
was thinking about it. Yeah. I think I'd like to have some. Yeah, absolutely.
Maybe we can work on that. All right. What are your thoughts? I mean, we had the Ag Outlook Forum stuff going on. Anything out there that we want to make the viewers aware of going into the beginning of the day here?
So, yeah, there's quite a bit of news coming out. The Outlook Forum numbers were posted very early this morning, about 6:30 Central Time. I don't think there was really any surprises. They increased soybean planted acres by about 3.9 million. They lowered corn planting by about 3 million. That's their expectations going into this spring. But they did also increase yields. Soybeans, about 52 bushels per acre. Corn, I think 181, so a new all-time record for corn, soybean production. And it puts our ending stocks swelling compared to this last year. Even though we plant less corn acres, if we produce that type of a crop, we're going to have more supply. And it's just kind of a bearish scenario right now. We have a lot of supply currently. Even if we plant less corn next spring, we're going to have more corn than when we know what to do with. We're going to build up our supplies. And so that part's negative. We did have export sales this morning, pretty much a non-event. Corn was a good number, 51.5 million bushels, kind of within expectations. Soybeans were 13, but there was cancellations of about 17 million bushels, and that was that unknown destination category. A lot of times that ends up being China. So we expect we'll see these cancellations continue because they're going to switch to cheaper Brazil supplies, Argentina supplies in the months to come.
All right, give me some good news. What's going on? It's like, oh boy. I mean, yeah, China's weak. We got great competition from South America. You just had this Outlook Forum. You gave me some news there that nothing sounded bullish, really, if you ask me. Are we going to have to wait until the 31st of March to get an acreage report there? Or are we going to have to wait for the weather and planting? I mean, what's going to really spur this market to the upside if we even get one?
Yeah, you know, from a positive standpoint, NOPA crush comes out later this morning. We're going to see another record crush for the month of January. It looks to be pretty friendly. We have a 3-day weekend coming up. Sometimes we'll get some short covering going into those 3-day weekends just for profit-taking purposes and then reestablish those positions. So we're talking about maybe small type of victories here, and that's, you know, something that we haven't had for quite some time. Longer term, it's really going to have to come down to whether we're going to, you know, like I said, even the USDA thinks we're going to lose 3 million acres of corn. Even then, if we produce a big crop, we are going to have more supply than what we can export or consume. So it's really going to get down to weather, in my opinion. You have to have some sort of a weather event in the United States during our growing season to turn this tide of sell every rally to where the funds cover their short positions. And they have massive shorts. And that, if they cover all those positions, you're going to see a pretty dramatic rally, but it's going to have to come from weather.
All right. Well, I mean, I guess we'll hang on that. I know it's going to be tough, but it sounds like you're telling me that we got to stop swinging for the fences here. We need to be laying down some bunts and moving the runners around, because that's where we have to play some small ball here until we get something better.
Exactly. Yeah. It's not time to try and swing for the fences, I don't think, at this stage of the game.
All right. Stay right there. We got to go away. We're going to pay some bills. We're going to come back and talk more with Brian Split about the livestock. We'll be right back after this. All right, welcome back. Let's get this Thursday kicked off right and take a look at some of the livestock prices. These are yesterday's closes. Got to remind myself that, okay, so we don't get too excited. But here we go. It wasn't a very good day yesterday. Just a little bit easier across the board all day, really. April's down $1.10 on the closes yesterday, 184 evens last. And that's in the middle of, to the lower end, I guess, of that range. We were down $1.60 going all the way out to October to 183 even. So 184 even was the close in April, 183 was the close in October. That's live cattle. How about the feeders? Let's see what we got going on there. There was a little bit more of a loss, but you know what? We did come back off the lows. I do remember that. So we had a March board down $1.77, 246.22, and we had a big range too, basically a $5 range. May was down $2.50 though to 252.95. So that one was taking some losses, but again, like I said, we came off our lows. We were down $4 at one point in time there. So this is lean hogs, and this was the one that we wanted to keep up all day yesterday. This one and cotton were the only two really plus boards we had. We got an April board that's up $3.45 to 84.52. All right, so not bad yesterday's close. That's a great segue to bring in, well, our guest analyst, Mr. Brian Hoops. Thanks for coming on again, all the way from Springfield, Missouri. All right, is it safe to dip your toe back in the water in cattle? Hogs looked okay. What are your thoughts?
As far as the cattle, that's been a really bright spot here in the recent months for the American farmer. I don't think that bull train has ended by any stretch of the imagination, but we did have some softer cash trade last week. They're buying for a holiday shortened kill week next week, and there's a lot of talk about shuttering some of their Saturday kills, trying to prop up their box beef margins, and they've lost a lot of their margins. They're about a negative $135 for every animal that they kill, so they need to improve that considerably, and either the boxes have to come up or they have to cut these kills in an effort to prop up those boxes, and I'm hearing that's what they're going to do. So it may be a little rough going for the cash markets next couple of weeks, but longer term, this cattle market remains very strong foundation, very good footing. Pork sales this morning were just outstanding. We had a huge move in the futures yesterday, probably going to continue with that today. Those export sales, 71.9 million tons of pork sold, shipments over 75 million tons. China was a big buyer, Japan, Mexico, all very substantial buyers of U.S. pork last week. And that, as I said, should give us some strength and follow through from the opening from yesterday's strong trade.
All right, so in order to make sure that everybody stays in a good mood today, we're going to change it to the market day cotton and hog report, and that's what we're going to do.
So there we go.
All right, brother. Thanks for coming on.
Thanks,
Great way
Brian.
to start the day. Brian Hoops, he's in Springfield, Missouri. Bring it back here to Music Row and hand it back over to Suzanne.
Kind of a new approach. Just stick with what works.